From the floor of the CME Group, this is Danny Riley on today's Cash Close. And the name of this video, the S&P 500, the Fed, and a big old squeeze job. The high of the day in the S&P came in recently at 21.00 even. The low came in at mid-afternoon at 20.52 even. And last, we're 20.89 even. I have no notes in front of me. I don't need any notes to talk about this. The MIM started coming out showing 900 million to sell, dropped down to 600 million for sale, and the actual MOC came out sell 320 million. Now, total volume, we've got size volume. We've got 2.5 million minis traded. I know that a lot of that may have been due to the S&P spread or part of that, but I think there was major volume that was going on here, both on the downside and the upside, or after the Fed came out and made its announcement. Now look, I get upset about this stuff when I look at CNBC and Fox and TheStreet.com and how they bring on their professionals and how they bring in this gloom and doom theory after the stock market's already sold off. To them, I'll tell you what, they can kiss my Irish ass. Because you know what, at the end of the day, investors want to know, they want to hear about people that have a forward-looking view on the market, not on this kind of thing where the markets are already sold off and they're all negative going into the Fed meeting. Now, for the last several days, MrTopStep's been on this. We kept talking about that the S&P was going to run stops up to 73, 74. We had a couple attempts up to the 2069 level, 2070 level. And even today, I thought that there was a very, very big possibility that there would be a big rally here. And in fact, I told my friend Cyrus, that was the ex-head of the Goldman Sachs prop trading desk, to get ready for 2080 in the S&P. Now, I'm serious. I got to be honest. I didn't expect the S&P to go that far. It rallied a total of 48 handles today. And you know what? That falls into something that MrTopStep, one of our main rules, and it's about that the S&P tends to go down, take days and weeks to go down, but it only takes one day to bring it back. The whole trend has been changed in one day by certain headlines that came out of the Fed today. And you know what? You know who made the most money on all this? The algorithms. The news algorithms jumped in front of these headlines and pushed the futures up into a gigantic mammoth buy program that everybody was caught chasing on the upside. You know what? I don't think that this rally is over. I think that the pullback late in the day is a healthy thing after running all these stops. I think that in the long run, the S&P is going higher. In fact, I don't want to say that I said this, but I was thinking to myself about saying, or I actually did say this to the Pitbull, and we both agreed that the S&P could trade up to 2085 and then back up to 2100. I may have even put that in the opening print. That said, I think we have to finish this by saying one thing and one thing only. Traders, the S&P is never going to do what everyone wants it to do when they want it to happen. It just doesn't work like that. Once the boat gets too loaded on the short side, the algorithms pick up those headlines, and then they jam that boat up on the upside. And today, they jammed that boat all the way up to 2100 in the S&P. We'll leave it like that. We'll see you tomorrow on the opening print.